Hello guys, I welcome you in this video. I just want to share with you a simple day trading strategy. You can use this strategy if you're a scalper or when you are day trading. So it works in both cases very well. If you can see on my screen, I have two important indicators. I have the RSI down below, and then I have the moving average all the way up there. And the moving average, you can see the settings here. It's just the 50 period moving average, so there is nothing special, just the 50 period moving average. And then the relative strength index, it's the default setting. So you can see here the length that is 14, nothing too special. So the moving average, it is the main indicator, and then the relative strength index, it is there to just add an extra layer of confirmation. I hope that is making sense. If you prefer another oscillator for confirmation, for example, if you prefer the stochastic, you can use it. If you prefer the MFI, you can use it. But in this video, I'm just demonstrating using the relative strength index. So here we are. What should you expect? You know, one thing that you need to watch as a trader is to watch when the waves change in terms of strength, or when there is a transition. So what am I talking about? I'm talking about these areas we can see whereby the sellers or the buyers, they hand over the market to the other players. So for an example, you can see it was buyer's wave, and then the market went towards the sellers direction. Same thing applies here. The momentum was moving on the downside, and then we have a transition here. The market slows down, and then it hands over to the buyer. So those are things that you should watch for as a trader, because that's what's gonna guide you on when to execute your trade. So then the next step is to make sure that you watch the RSI. If the RSI is overbought, now, for an example, in that case, if the RSI is overbought, it is a good sign. It doesn't necessarily mean that you should execute your trade. The only place where you execute your trade, it is when the price bridges the moving average. I hope that is making sense, because that's the main point for this strategy. When the price bridges the moving average, this is where you are looking for to execute your trade. But you should make sure that you confirm with the RSI that, okay, before I can execute my trade, I need to make sure that if I sell, I need to make sure that the RSI gave me a sign of price being overbought. For an example, here we can see, and then we can see that's where the action happened. And then when this price breaks the moving average, it is already clear, because you've seen the relative strength giving you a sign. Same thing applies. You can see the relative strength going down here, and then your role is just to wait for the price to break the moving average, and then as soon as it breaks the moving average, that's where you exactly execute your trade. Same thing applies here with the RSI showing us something, and then our role is to wait for the price to breach completely the moving average. And when I'm saying to bridge the moving average completely, you have to make sure that there's a candle which opens outside the moving average and closes outside the moving average. So if I can make sense here, you can see the moving average wasn't breached because there isn't any candle which opened and closed outside the moving average. But here we can see this red candle, it opened and closed outside the moving average. Same thing apply here. You don't enter on this big red candle, but you'll enter after this smaller red candle, because it opened and closed outside the moving average. And then where you put your stop loss, this is very important. You make sure that you put your stop loss almost above or below the moving average. So for an example here, let me clear some of the drawings. For an example here, if you execute a trade all the way down here, you have to make sure that your stop loss is above this moving average. You don't have to position it below. No, you have to make sure that it's above the moving average. And then once it's above the moving average, you can see, or you can kind of search for good positions. For an example here, we can see we have these low, or this support here, which can mark a very good place for you to position your stop loss just right above it. So it is important to make sure you position it above or below the moving average, and then search for a key level, and then kind of use that key level as some kind of a bearer. Same thing applies here. Open a trade almost all the way there, and then you position a stop loss just right below the moving average, but you have to kind of seek for a good level. Here we have this minor support, then your stop loss can be right below there. Same thing applies when you execute your trade all the way in that area. Execute it just after the price breaches that moving average. You make sure that it's above, and then you seek for a very significant level. That's our resistance there. You can just position a stop loss all the way in that area. So I hope this is making sense. But the main important step, or the important step, not the main important step, the important step is that make sure that the RSI gives you a signal, or the oscillator that you'll be using, it gives you a signal that prices are a little bit oversold or overbought, and then from there you'll have to wait for the price and the moving average to cross or to breach each other, and then you will make your decision based from that. Moreover, you can kind of add or implement some price action techniques. For an example, in this down below here, we can see after the seller's wave died down, we can see that we have this channel here. Let me just change the color. We have this channel here, and we can see that there was a point where this channel was broken, or this pattern, where this pattern was broken all the way there. If you're too skeptical as a trader, you can wait for such scenarios where you'll execute your trade, even after the moving average has given you a signal. You can kind of like wait for this breakout, because they will add even more security in your position or in your trades. I hope this is making sense. I'm just gonna keep it short and leave it here. Thank you, guys.